moram reči, da je zelo, zelo lepo, da sem spet v Kopru, je bilo že kar nekaj let. Še posebej, kar me res veseli, je spremljam evolucijo, kaj se dogaja v Sloveniji, ne samo v ekonomskem vidiku, pa tudi v šolskem vidiku. V bistvu me to nekako bolj zanima in moram reči, da je zelo, zelo pozitivno in lepo presenečenje je to, kako se je v Kopru tako razvila vizija ene res kvalitetne univerze in jaz vem, koliko je imel profesor Marušič pri tem, da je prinesel en velik del matematike na Primorsko univerzo. Jaz se zelo, zelo spomnim enega pogovora, ki sva ga midva imela, kot sem bil jaz v drugem letniku in je bil on moj profesor v Kaliforniji. To sem si tako živo zapomnil, kako je takrat recimo nekako mi je povedal, da kako šolski prostor v Sloveniji nekako potrebuje več opcij. In takrat sem naredil tisto povezavo, da ko živim, recimo res, ko živiš v Ameriki, imaš toliko različnih univerz, toliko različnih opcij, vse se odpirajo, vse probajo privačiti druge študente v nekakšnem konkurenčnem prostoru. In meni se, da je to vizijo on že takrat nekako razumel in že takrat govoril, kako bi bilo pomembno, ne samo za Koper, pač pa za celo Slovenijo, za cel razvoj te res čudovite države, da se razvije visoki šolski sistem izobrazbe na Primorski univerzi. Pa še nekaj bi rad opozoril, ta del matematike, ki je profesor Marušič res svetovno priznan, teorija grafov in tako naprej, to je trenutno postalo v tej finančni krizi zelo, zelo aktualno področje tudi v ekonomiji in financah, prav iz tega, ker kar se je izkazalo, je to naravna pot, kako se modulira plačilne sisteme. Plačilni sistemi, svetovni plačilni sistemi v globalni ekonomiji so grafi, so vozli in so povezani. In kaj se je dogajalo, seveda, kaj se je dogajalo čez to finančno krizo in kaj še zmerom dogaja, postanejo določeni deli grafov v bistvu nekako bolani. In centralne banke in druge inštitucije rešujejo to. Tako da veliko primerov je, ki je ta del matematike zelo, zelo tako pomemben in jaz upam, da boste tudi v tem, ker je res vrhunski kader v teoriji grafov na univerzi na Primorskem, se tudi mogoče poglobili v to in nam pomagali pri reševanju teh res globokih in kritičnih ekonomskih zadev, ki se tukaj dogajajo. Jaz imam eno kratko predavanje, približno 25 minut, o splošni evropski finančni situaciji. Se malo pravičujem, zato ker so vsi moji slajdi v angleščini in jaz bom potem presedlal in bom imel predavanje v angleščini, zato ker se mi zdi, da je nemogoče, da bi govoril slovensko in gledal v angleške besede. To lahko mogoče Dragan naredi, jaz pa tega nisem sposoben. Tako da seveda, kjerkoli kakšno vprašanje, pa to debata, prosim, da je seveda v slovenščini, ampak meni bi bilo veliko lažje, da to pravim v angleščini. En del tega je tudi terminologija, ker je ne poznam prav tako dobro. Tako da se vam vnaprej zahvaljujem za vaše razumevanje, kar se tega tiče. Ampak sem hotel dokazati, da vsaj še govorim slovensko, kakor se da dobro. Čeprav že mnoga leta živim v Ameriki. Takole. Tako zdaj pa damo tole. Aha. Zdaj še malo v slovenščini, preden bom se čist prestrašil, pa bom nehal. Včeraj, ker sem še tele slajde, ker sem še tole prezentacijo končal zvečer, se nisem nekako mogel spomniti, kaj bi bilo pa dober naslov. Tako za to. Mislim, imel sem prvo to, evropska finančna kriza, ampak to je, ni najbolj seksi, kot bi se temu rekel v tem smislu. In zdi se mi, da veliko vprašanje je, ki se ga sprašuje veliko ljudi, ne samo ekonomistov, profesionalnih ekonomistov, ljudje, ki delajo v industriji, bančnikov, v finančnih inštitucijah, Tudi navadni državljani se sprašujejo, a je pot iz tega. A smo nekje na kakšni kritični točki in išče se pot, kako ven iz te krize. In to je zelo, zelo pomembno vprašanje. Jaz se ne bom zdaj pretvarjal, da imam odgovor, da vam lahko povem recept, ki reče, zdaj bomo pa, če naredimo to, pa te finančne krize več ne bo. Vsak, ki to reče, mu ne verjamete. Teh odgovorov ne pozna noben. Le pa obstajajo principi, ki bi vsaj v principu, vsaj poteze, strategije, ki bi vsaj v principu mogle, na katerih izkušnjah vemo, da so to potrebni koraki, ki nas bi privedli iz te situacije, v kateri smo vsi. Ne samo Amerika, ne samo Evropa, ampak cel svet. Tako da na koncu tega bom pač probal prikazati, kaj bi bili osnovni temelji te strategije, ki so mogoče, samo mogoče, hočem res to poudariti, na katerih bi ena strategija vsaj temeljila, da nekako zaključimo ta, ampak res skoraj tragičen del, začetek 21. stoletja. Kako bom to naredil? Mislim, kako je organizacija, da vam dal malo tako, da bi imate malo občutek, kam bom šel v teh 20 minutah. Naredil bom en tako zelo splošno oris situacije na finančnih trgih. Okay? Tukaj ne bo nobene matematike. Ampak bomo pogledali malo podatkov, bomo dobili občutek, kje smo, kako smo, kaj je to. Potem bom rekel, kaj se lahko hipotetično zgodi. Kaj je, kot bi temu rekel, the worst case scenario. Okay? Ta worst case scenario je nekaj, kar se moramo zavedati, zato ker to ni trivialna možnost, da je to nekaj 0,00001%, ampak nekaj veliko, veliko bolj realnega za strahotnimi posledicami. Če se ta scenarij res zgodi, kaj bodo te posledice? Tega ne ve nihče, ker se kaj takega še v zgodovini ni zgodilo. Tako da jaz bom pač vrisal eno pot nekakih, eno potencialno pot, kaj bi se odvijalo, kako bi tak scenarij izgledal, ampak res moram poudariti, da je to čista špekulacija. Ljudje, ki se spoznajo statistiko, ki razumejo te zadeve, kaj se dogaja trenutno na svetovnih finančnih trgih, mi smo izven support of the distribution. V tem, kaj se dogaja, nimamo podatkov. Nimamo modelov in tudi nimamo, če bi imeli modele, ki jih razvijamo, kako se te stvari dogajajo, jih ne moramo oceniti, ker nikoli niso bili v tej situaciji, da bi imeli realne podatke, da bi sploh vedeli, kako to zmodelirati. Tako da to je zelo, zelo pomembno. No in potem, ko bomo risali tako, recimo, potencialno situacijo, kako bi se ta najslabši scenarij razvijal, kaj bi potekal potek dogodkov, bom pa zaključil nekako z osnovnimi principi, kaj bi bila izhodna strategija, da se kaj takega ne zgodi in če se zgodi, da se to v bistvu ustavi, preden se res vse konča v zelo tragičnih razmerah. No, potem so lahko kakšnakoli vprašanja, bom probal odgovoriti, če imajo ljudje kakšne vprašanja, potem bo pa debata še z drugimi gosti. Ok, let's do some work. No, kako pa? Sej dela, ok. Prvo, kar je, it's a disclaimer. Everything I say, it's in no way, okay, it's my own personal opinion, okay? I'm not speaking for Bernanke, Mr. Chairman. All right, these are really my own opinions, and it's important for you to understand. I'm not here in any kind of official capacity. All right. The other point is, I came across Lao Tzu. The Chinese philosopher is a founder of Taoism. So I was thinking about this problem, saying this situation really, really reminds me where we are, at this point in the economy is that if you don't change direction, you may end up where you're going. Okay? We need to fundamentally change the direction where we're going. Otherwise, we're going to go, but we don't want to get there. Okay? That's a little, my nod to my humanistic side of cover this. Okay. Facts. Fact number 1, fiscal deficits. Proračunski primanjkljaj. In advanced economies, so industrialized economies, Europe, United States, okay, United Kingdom, and so forth, have exploded, have ballooned over the last 4 or 5 years. Some of that, of course, it's completely understandable. Oops. There's normal, what they call automatic stabilizer, fiscal stabilizer. When the economy goes in a recession, right, the country collects less taxes. So the budget deficit increases if you do not change your spending. There are more transfer payments. More people are unemployed. They receive unemployment insurance benefits, health benefits. There's, all of the things that put pressure on budget. So this is normal, and it's, of course, the right thing to do. These are automatic stabilizers that give you cyclical movements in fiscal deficit. The other stuff is there's been, of course, a lot of discretionary economic stimulus. Governments in Europe, United States, in all industrialized economies have tried to reignite economic growth by spending, right? By fiscal stimulus. Absolutely right thing to do. Coordinated monetary and fiscal policy is a way to get out of serious economic recession. As a result, of course, government debt, okay? The amount of debt that we owe, so we kept borrowing a lot over the last 4 or 5 years, so the amount of debt that we have accumulated has grown quite a bit, okay? Those are 2 facts. How bad is the situation? Well, this was a really bad recession. This graph shows, okay. This shows real GDP, the broadest measure of economic activity, okay, gross domestic product. It's in real terms, okay, so there's no inflation here. This is real stuff. For Europe, okay, it's indexed, so it equals in 2008 Q1 it equals 100. All the countries are indexed to equal 100 in the 2008 Q1. That's right here. This first quarter of 2008 it equals 100, okay, and then the black line is for the euro area as a whole, and these are the countries that you all have been reading in the newspapers. Okay? You can see it has been pretty bad recession. Okay? For the euro area as a whole, okay, over the first year and a half of the recession, GDP has fallen 6 percentage points. That's a huge loss in standard of living. Okay? This is huge social cost. Okay? In some countries, things have been really extreme. Ireland, 10%. 10 percentage points relative to level. Not only that, we are now, for all intensive purposes, in the United States, the financial crisis has started in second half of 2007. It took a little while for it to get across Atlantic, the airlines. Okay? So probably in Europe, the real effects started to be felt more like in the beginning of 2008. Okay? We're now in 2011. Approaching the end of 2011, and we are still 2 percentage points below for the euro area as a whole of where we were 3 years ago. It's a serious loss of standard of living. Okay? Not only, perhaps more worrisome, certainly from a social perspective, is the increase in the unemployment. Okay? These are unemployment rates for the same set of countries. Okay? These are enormous increases, okay, for countries like Spain. Over 20% of people are unemployed. Can you imagine social costs of unemployment? Okay, not that there are so many people unemployed. Okay, a number of people are underemployed. They don't have jobs that are commensurate with their skills. They went to university. They invested in their education. They invested in their human capital. And now they're working, whatever it is. They don't have jobs that are commensurate. Okay? There's enormous social costs to this high and persistent levels of unemployment. And in many cases, these things are still increasing. And these increases in unemployment are despite the fact, right, that governments have tried to subsidize jobs, they've tried to help the economy. Okay, this is worrying. Okay, given this really bleak economic developments, this looks at the fiscal situation. Okay, what happened to the budgets of European countries, particularly the ones that are sort of most vulnerable? Budget deficits. Each one of these bars is a budget deficit for a country. This is euro area as a whole: Greece, Portugal, Spain, Ireland, Italy. They're expressed as a percent of GDP. Okay, the budget deficits have gotten huge, obvious reasons. Okay, they've been extraordinary in Greece, Ireland, Spain. At the same time, remember, this is the flow. Okay, this is budget deficits, and this is the debt outstanding as a percent of GDP. You can see, right, this number, all of these look like hockey sticks. Look at Ireland, right? Its debt to GDP ratio from the beginning of the financial crisis went from 30% to close to 100%. This is very, very, very worrisome. Okay, this just puts in a little bit of a perspective. Okay, just to this is a way of, I was trying to organize how to show you essentially kind of a little more multidimensional sense, kind of the fiscal situation. Okay, how much fiscal space? So when I plot here, this is for the year 2010. Okay, so just one point in time, 2010. And on the horizontal axis, I plotted government deficit, right? These numbers as a percent of GDP for 2010 for each country. And on the vertical axis, I plotted gross debt as a percent of GDP. This number, okay? So it's kind of you have two dimensions, right? One is how much am I borrowing from year to year, kind of like the flow concept, and then the stock, right? The integral, okay? Over time of all the stuff that I've borrowed, okay? And the red dots are countries that are on the euro, including our little beautiful place. And the blue countries, okay, blue dots are either EU countries, but they don't have the euro. But I also put in where I live now: U.S., UK. I don't know if Canada is in here. Anyway, okay. So here's the point: you do not want to be up here. This is bad area to be, right? It means you have huge government deficits and huge amount of debt already. You can see, obviously, Greece is way out there. Japan, I didn't even put it. Okay, it's 200 and it's like here. Okay, right? U.S. doesn't look that great. Okay, UK doesn't look that great. Okay, and you can see, right? Here we are, Slovenia. I think we have some fiscal space. I think we have time. Okay, but if we don't do anything, I guarantee it. Okay, I don't make forecasts very often, but when I do, they're usually wrong, according to my wife. Okay. We do not want to move up in this way. Okay, we're still okay. We have to prevent from drifting over time. It's not going to be a drift. Okay, this can happen really fast. Greece moved from here to here in a couple of years. Okay, we want to avoid that. So, consequences. We've had economic financial crisis for close to 3 years. The consequences have been the legacy of this high debt and all of this borrowing is going to take great effort and a lot of time to undo. Okay, it's not business as usual anymore. What's even more worrisome, is particularly true for the European countries, less so in the United States, the demographic profiles. Okay, populations are getting older. You're not having kids. Okay? Nataliteta. Okay, populations are becoming older. You're not bringing in new workers. Okay, so it means that debt trajectories are becoming very, very worrisome. Okay, and recent financial markets have woken up. They're like, uh-oh, not all is well, right? Things are really worrisome. How do we know that? Well, let's look at some data. This shows, there are 3 panels here. I grouped them by countries. Sort of a really, really problematic. This is my own, right? Pretty much everybody would agree. Potentially problematic. And then things where financial markets think things are really, really safe. This shows the 10-year yield on a sovereign bonds for Greece, Portugal, and Ireland. This is 10-year government debt for these three countries. Okay, it's an interest rate on their debt, and I'm going to measure it relative to a German security of the same 10 years. So I'm looking at the difference between two interest rates. A credit spread, these are basis points. 100 basis point is 1 percentage point. Greece borrowing costs are 20 percentage points, okay, higher than Germany. Imagine running a country when you're borrowing, okay, at 20 percentage points above, what the rates are. It cannot go on very long, okay? Look at this. What's particularly interesting, look around the middle of 2011. About mid-2011, there's a very interesting phenomenon, right? Greece has been going up. Portugal, right? Ireland, right? Things look bad. But look what's happened here. Kind of countries that were often we thought maybe things are okay, things are controlled, right? These are not quite the most vulnerable countries. About middle 2011, Italy, contagion, right? Italian credit spreads, right, have been well below. Spanish one, about middle 2011, they caught up. Okay? That's kind of about the contagion. Markets are getting worried by more and more countries. Okay? At the same time, what's happening, okay, is that now this here, the third panel, okay, are just simple interest rates on 10-year government U.S. Treasury bonds, UK gilts, and German bunds. So these are not spreads, right? At the same time, when spreads for these countries blow out, what happens to the middle 2011, right? Interest rates in the United States, United Kingdom, and Germany, they fall. The U.S. is borrowing at 2%. Germany is borrowing at, for 10 years. Okay? Very low rates. What happened? People said, you know what? This is too risky. Let's go into where we can get our money back. So there's a huge demand for securities issued by United States, United Kingdom, and Germany, right? Which bid up their price and falling their interest rates going up. That's called flight to quality. Okay? Financial markets all of a sudden say, oh, risk? I don't care risk. I just want my money back. Where do I go to put my money to get it back? Okay, there's no absolute safe haven, but U.S. government debt is a heck of a lot better than Greece debt. Okay? This is called flight to quality. Oops, these are financial. These are first kind of effects of contagion, and drops in risk-free interest rates are indications that financial markets are getting spooked. The other stuff is that European banks have large amounts of dollar-denominated assets. Okay, they make loans in dollar countries, maybe US or whatever it is. Okay, and they want to fund those loans, okay, with dollar-denominated liabilities. Okay, they can't borrow. They cannot borrow those dollars. Okay, certainly they cannot borrow them what they call, unsecured cash markets. Things like Euribor. You probably heard those terms. I know there's a few bankers in the audience. Okay. The dollar funding is becoming a massive problem for European banks. These things, they're just essentially, these things are nothing else but, in a sense, premiums. How much do European banks have to pay to borrow dollars? Don't worry about what they are. Basically, technically, this thing should be close to zero. As you can see, things are beginning to climb. Okay? What the ECB is doing, ECB is borrowing every day billions of dollars from the Fed, where I worked. We have swap lines with all major central banks. Okay? What happens is that ECB borrows dollars from the Fed, and then ECB auctions those dollars to European banks who cannot get them in the in unsecured funding markets. Okay? Why do we need to do that? Because if they cannot finance those dollar-denominated assets, they're going to start selling those dollar-denominated assets. What happens when there's a huge increase in supply? Prices fall. Right? It is the value of these firms. You're going to get into the SPY. You're going to get into assets, into fire sales. Very, very dangerous. What happened after Lehman collapsed? Obviously, all of these adverse developments have weighed on stock prices. major European stock indices, okay? If I look at March 1st, 2011, okay, right here, it's 100. You know, particularly for financial institutions, are down 40%. And remember, we had 2 years of a financial crisis before. So it's not like we're starting at a really high level. Okay? Things have gotten a lot worse. Okay? This is something called a credit default swap. It's a price of insurance. How much are you willing to pay, okay, to insure yourself that, say, a bank A fails, that you will get your money back? Not depositors. Deposits are insured. Okay? Our deposits are insured. Talking about bondholders. Banks borrow in the capital market. Okay? There's a lot of this. Right? This is the median European bank. It's moving up. Price of insurance, okay, it's moving up. European banking sector is becoming very, very risky. And the financial markets are beginning to price this. I calculated this thing using this financial instruments, this credit default swap. You can make some reasonable assumptions and you can calculate a probability of default. Okay? Now the finance guys here, I'll give it that. So I made two assumptions. I made one assumption. I have to assume how much, if you default, what's the recovery rate? Okay? So you're not going to lose everything. If I hold, right, $1 of Italian bonds, I'm going to get maybe back 20, 30, 40, 50, 60 cents. I assume the recovery rate is 40 cents on a euro. Okay? So 40% recovery rate. Okay? And you can do a little algebra, okay, and back out cumulative probabilities of default over the first 6 months, 1 year. These are very nerd-term cumulative probability of defaults. As you can see, across everyone, they're moving up. Okay? Probabilities of default over near term are very, very high. Okay? Let's look at long term. This is over the next 5 years and next 10 years. Right? This is very, very worrisome. Okay? The likelihood of default, on a sovereign default on a massive scale, okay, has increased enormously, okay, since this goes a little back, right, to the tales of the financial crisis, right? Things have started to get worse and worse again. Okay. So the point I want to make is, right, this financial data that I just showed you, scores should be a warning sign that there hasn't been very much progress on the whole crisis management and how to address Greece's funding needs. Okay? If this was good strategy, those things would not be happening. Okay? The risk of a disorderly Greek default has increased, as you know. Okay? And this weekend on October 23rd, Euro area leaders are meeting and are going to come up, or they promise they're going to come up with some strategy of how to address that. And I hope they are convincing. I hope they come up with some kind of a broad strategy of addressing this financial stress. So I'm going to walk you now. So what do I think? What would be, like I said, nobody knows what's going to happen. This is impossible to forecast, okay? But what would be a possible worst case scenario? The worst case scenario, in my mind, would look like this. I really picked a terrible day. It's raining this, and I'm telling you about the worst case scenario, right? So, everybody's going to be depressed now. Okay. Greece abruptly defaults on its debt overnight. Next morning we wake up, you go on your internet, you check Yahoo Finance, whatever it is, Greece defaults. Why could it do that? Well, two possible reasons. Greek government, they're facing massive political pressures. Right? There's huge political unrest and opposition in Greece. They can no longer sustain the serious fiscal adjustment that is expected and demanded of them from their lenders, IMF, Euro area, and so forth. The other possibility is creditors. Say, you know what, we don't want to throw more good money after the bad money. You do not get any more funds. You cannot get the next installment of the money we promised. Greece defaults on its debt. What is likely to happen is the default will mean essentially huge losses for all Greece's creditors, which are major European banks, as well as the European Central Bank, who has been buying huge amounts of debt of these countries to stabilize them. So it doesn't prevent the spreads from going completely out of control. The Greek banking system collapses, massive defaults. Greece experiences severe economic dislocation, okay? And possibly withdraws from the euro area, unilaterally. There's nothing in a political arrangement that prevents them from doing that, okay? Contagion, the next stage. Ireland, Portugal lose all access to sovereign debt markets. Financial credit market says, you know what? Under these conditions, Ireland and Portugal cannot borrow at all. Right? Their spreads become infinity. Okay? Completely non-linear. Not only that, but financing costs for Belgium, Italy, and Spain, which are also very vulnerable, go up. In a worst-case scenario, okay, this would be catastrophic if Greece unilaterally exits the euro area. Okay? In a worst-case scenario, okay, it basically doubts about the viability of the monetary union would become really severe. Has euro failed? Possibly. In the extreme, Belgium, Italy, and Spain lose all market access. They can't borrow at all to finance their things. The financial crisis becomes, it spreads. We're not talking weeks, months here. We're talking hours, days. Okay? This is happening really fast. Expected losses at financial institutions when something like that happens would be massive. In other words, all European financial institutions becomes enormously risky. Nobody wants to deal with it. You are just too risky. I have no idea what you hold. You're telling me I have no exposure to Greek debt. I don't know any Spanish money. I'm sorry. I don't care. Just walk away from it. Okay? Which means that dollar and euro funding markets, the key, the lifeblood of the way financial system functions, financial institutions lending to each other, okay, essentially, become severely dislocated. Banks, right? What is the position? If you're in a bank, what are you going to do? You're going to hoard liquidity. You're not going to use your balance sheet, okay, to help anybody else's. You're going to try to hold as much liquidity, cash, okay, on your bank. You do this up, okay. Private credit market sees up. Nobody gets a loan. Nobody wants to make a loan. Doesn't matter, okay. European equities. Stock markets collapse, credit spreads soar, euro depreciates sharply. The foreign exchange value of the euro falls through the ground. Okay? Economy, real economy. Business and consumer confidence. How would you feel if something like that happened? Not well. Right? You can imagine. Confidence, right, would collapse. Households and firms face significant credit constraints. They can't borrow. Banks become extremely reluctant to lend. Okay? Investment consumption drops across the euro area. You're in a massive recession. Policy response. What could you do then? You let something like that happen. What do you do in the meantime trying to fight the fire? ECB provides, it opens the spigots. It opens the hoses to provide liquidity to the banking system, provided they have sufficient collateral. So it tries to isolate the good banks, okay, to make sure that they can still function. Core European countries, France, Germany, right, and so forth, they essentially nationalize and recapitalize their banking system, including the banks that are technically insolvent. They have a wholesale nationalization of the banking system. Countries that have some fiscal space, that have a little maneuverable, are going to do massive fiscal expansion to try to, counteract the recessionary effects. And if there is no concerted strategy to ensure liquidity for these kind of key countries to limit the contagion to Europe, this thing goes global. It's like a YouTube video. It goes viral. Okay? A way out. So like I said, there's no recipe, but I think there's some general principles that any coherent strategy should adhere to. Okay? And here are some principles that I thought this is a possible way out. Okay? Maybe. What would be a good? What needs to be done in some sense? Okay. First thing, vulnerable countries, Greece, Portugal, Ireland, Spain, maybe really need to intensify their fiscal consolidation effort. They're painful, yes, they're very painful, but that is the only way, serious upfront budget cuts that can convince markets that you are serious about it. I don't think there's any way out of that. You have to take the really, really bitter medicine. Point number 2. All this consolidation, fiscal consolidation, shouldn't just be cutting budgets, okay, without. No, it should be strategic, it should be smart. By what? You should try to do productivity-enhancing structural reforms to improve flexibility of labor markets, okay? You should try to think long-term. Economies will recover. The natural tendency of financial and economic systems is to grow, okay? They will recover, but it can take a long time, okay? And you can invest, you can do things up front that make smart fiscal policy, okay? Changes in tax structure that reduce economic distortions, gray economy, right? People don't pay taxes, all of these things, okay? Reform the tax code, okay, that collects a reasonable amount of money, but it collects it all, okay? Number 1. Economies that have stronger fiscal positions, okay? The guys who were, remember that quadrant, that big graph, that were in the bottom part of the things? Those economies should support, it needs to be coordinated. They need to expand fiscally. They need to support aggregate demand. Why? Say, if Germany, who does have some maneuvering space, right, starts, expands fiscally, some of that will be coming by imports into Germany. Some of those imports will be coming from Greece and other countries that are retrenching, and that's going to help support economic growth. Okay? So you try to lessen the shock. Okay? Not only that, countries that maybe cannot afford fiscal expansion should be really slow, but are still in good shape, should make sure that they don't retrench all at once, but they do it very, very slowly to try to lessen the shock. Okay? Try to absorb some of the shock, okay? Because this would be very painful. Without a doubt, monetary policy should help. But, we're in a very serious situation. We cannot solve that by monetary policy alone. I've been saying that for a while, okay? We may be at the end of limits of monetary policy, okay? Nevertheless, there's a lot monetary policy can do. It should be highly accommodative and should provide lots and lots of liquidity to the financial system, okay? To try to get banks to lend again, try to get the economy to start. Politically, your leaders really need to strengthen the institutional framework, okay? In particular, a country announces policies. Are somebody checking these policies? Is somebody saying, are you doing this stuff? There should be some kind of a mechanism for surveillance. Are you really implementing reforms that are needed? Okay, we're in all of this together, okay? Joint decision-making process. Okay, it cannot be just Sarkozy and Angela Merkel, discussing somewhere, in private. There needs to be a joint, clear, transparent political decision-making that tries to deal with these type of problems. And a disciplined and coherent communication strategy. Right now, financial markets are very, very spooked, okay? Part of the reasons why they're reacting so much is precisely because there are conflicting messages. There's some inconsistent communications, okay, coming from, different governments. One says, Greek default is possible. No, Greeks will never default. Yeah, okay, you have to communicate clearly and consistently, okay? You cannot have somebody says A, then somebody says B. Financial markets do not like uncertainty. Uncertainty has a price. It's called the risk premium, and it can be huge. European banks, the banking system. You need to strengthen your balance sheets and improve capital position. You got to write off bad stuff. If you can get capital, raise capital, okay? Most likely, a lot of them cannot. It will be coming from the government. These structural dollar funding needs, I don't know how to fix that, but that's something that needs to be fixed. The fact that European banks need so many dollars and they can't get them in the market. That is really causing a problem, okay? Because it's gumming up the whole financial system. Okay, nothing is happening. What you really need to avoid, you need to avoid a bank run, an indiscriminate bank run, where everybody runs to their bank and withdraws all their money, regardless of whether or not it's a good bank or a bad bank, or it doesn't matter, right? That's how bank runs have happened. How would one do that? There's increased transparency of financial reporting. Investors, financial markets should have confidence in banks' profits, in their losses, in their expected losses, okay, in their projections. That's going to secure, okay? If you're not providing this kind of information to the markets in this kind of crisis situations, you're going to be seriously penalized. At the same time, regulators, central banks, and other financial regulators need to conduct regular, incredible stress testing exercises of the major European financial institutions and release that information to publicly, right, so the financial markets, learn and understand, okay, at what positions are the banks. Okay, because once you lose that trust, everybody's going to run at the door at the same time. And it's going to be messy. Even the best efforts, if you did all of these things, okay, it could be that maybe we've crossed the Rubicon. The fiscal positions have gotten so bad that there's no way to put it on a sustainable path. Why could that happen? It could happen is the macroeconomic environment may be just a lot worse than we're expecting. Things could be even worse than we're expecting. That's one possibility. Any shock. Suppose a major financial institution collapsed. It could happen, right? There have been losses. There's rogue traders. There's all kinds of uncertainty. A few months ago, there was stuff about UBS, right? Some guy, I don't know how many, they had losses of several billion. Okay? Suppose there's some big, it could collapse. Barings collapsed, okay? Because of that, major financial institution, okay? That could derail, right? Dexia, you have to bail out Dexia. That severely impaired Belgian and French, fiscal consolidation. All of a sudden, you have to support this major bank. Risks, serious risks. Political, social will may be insufficient to bring the kind of austerity to successful completion. It's a real political risk, okay? Not having governments, not having strong coalitions, okay? Not having a government that has a very, very weak majority that is unable to carry out key structural reforms. It's a serious political risk in this situation. You've got to have plan B. Something, okay, if things get really, really out of control, okay, you got to have in the back pocket, there's got to be a plan B how we could possibly allow for orderly debt restructuring, okay, of maybe many years. Okay. So I'm done. I think this was pretty sobering, but I think the situation is pretty serious. So I'll take any questions if people would like to ask questions.